Hello everyone. Today we will be discussing the basic accounting elements. What is a credit? What is a debit? So this table shows in what cases it will be a debit entry and in what cases it will be a credit entry. So what we can see in this table that we have five items. One is asset, second expenses, third liability, fourth revenue, and fifth owner's equity. Assets, liability, and owner's equity are part of balance sheet while expenses and revenue are part of income statement. What we can infer from this table is that whenever there is an increase in the asset, it will be a debit entry. Whenever there is an increase in the liability, it will be a credit entry. Similarly, for income statement, whenever there is an increase in expenses, it will be a debit entry. Whenever there is increase in the revenue or in the owner's equity, it will be a credit. So this simple logic can be applied to all kinds of business transaction to understand whether it will be a credit entry or it will be a debit entry. Now we will see this with the help of examples, how this particular method is applied. So let us take first example. We are buying inventory worth of $80 by paying cash. So what will be the effect? The effect will be that we will get the inventory while our cash will go down. So inventory is a asset account and cash is also a asset account. So inventory account will go up and cash account go down. From the previous table, we can see that whenever the asset account goes up, it will be a debit entry, and whenever the asset account goes down, it will be a credit entry. So if we will apply it to this business transaction, what we can see is that inventory account is going up, so it is a debit entry. Cash account going down, therefore it is a credit entry. Both are asset accounts. Now we will take the second example. Company is borrowing $200 from the bank. What will be the result? Company will get the money from the bank. That is, its cash account will go up, while its liability towards the bank will also go up. So there will be two impacts. One is assets go up. Second will be liability going up. So increase in assets by $200, increase in liability, that is borrowings from the bank, will also go up by $200. So this will be the general entry which will happen, that my cash will go up by $200. Cash is an asset account. Whenever asset account goes up, it will be a debit entry. Whenever my liability account goes up, it will be a credit entry. Now I will take the last example. Company is paying $400 towards the salary. What will be the impact of this transaction? First, my expense account will go up and my cash account will go down. We know whenever the expense account goes up, it will be a debit entry. Whenever the asset account goes down, it will be a debit entry. We can see the two impacts of this transaction. My expenses are increasing by $400 while my assets are decreasing by $400. So what will be the final credit and debit entries? Salaries expenses will be a debit entry because my expenses are going up. Whenever there is an increase in expenses, it will be 400. It will be debit entry. And my asset account is going down. So whenever there is decrease in the asset account, it will be credit entry. So we can apply this particular method in almost 80% of the business transactions to deduce whether it will be credit entry or it will be debit entry. Thank you for this short presentation.